Hey friends, in today's video I'll give you my best attempt to explain investment taxation in Denmark. First, I'll tell you about the taxation principles and for which types of funds these principles apply to. Second, I'll put that together in an easy and visual way. And third, I'll tell you my own approach and my recommendations to you. If you're new here, my name is Mario and on this channel I help experts in Denmark and sometimes as well on their finances, investing and making the most of their life in Scandinavia. Just a note, and to get it out of the way, this applies only for normal investments accounts. What I'm going to be telling you today doesn't apply for actividades per conto. For the actividades per conto, you'll be paying only 70% in capital gains tax, and you'll do so every year as unrealized gains as well, if that's what you had. There's a link over here where I explain this concept or this type of accounts in more depth. With that said, there are two taxation principles in Denmark. I'll go through them first and then tell you for which types of funds do these taxation principles apply. Principle 1, it's called active incomes, which we can translate as stock gains. And this is the most common tax we have been bashing a lot in this channel. This is where it's 27% for the first 57,200 krona in realized gains, and then 42% for everything on top of that, which might be raising to 45% later this year. Principle 2, it's called capital incomes or capital gains. And this is more complicated. I don't even understand it completely, but what you need to know is that it's worse than active incomes. It goes from 37% to 42% plus church tax depending on what is your income level. So ouch. To make matters a bit more complicated, there are also two principles that say when these different taxes should be applied to depending on the timing. The first of these timing principles is called the realización principet or realized gains principle. And this is a principle which says that you only will go and then pay the taxes when you realize your gains, meaning that if you bought a stock, for example in 2020 for 100 and it went up to 200, this year for example 2022, you will not pay any taxes on that until the moment you say, okay, I'm going to be selling the stock. If you then sell the stocks, then yes, you pay taxes, but if you don't sell the stock, you don't pay taxes. The second timing principle is called the laggards principet or unrealized gains principle, and this is the real nasty one. With this setup, with this type of timing, you will be paying taxes on the gains of your investments even if you don't sell by the end of each calendar year. So going back to our example, imagine you bought a stock in 2020 at 100 krona and then it went up to 120 krona by the end of 2020. You will be taxed at the end of 2020 for that 20 krona gain even if you have never sold. If this sounds complicated, it's because it is complicated. And to help you guys on this, I made a free online course that you can find a link down in the video description where I explain all these concepts in more depth. And of course, if you have not done so yet, make sure you subscribe to the channel because in this way you will be able to receive all my videos coming every week on this type of topics as well. Now that you know these two taxation principles and the two timing of the taxation principles, which applies in which case. If you buy stocks, so for example you buy Apple stock, you buy a Tesla stock, you will only be paying active incomes cut, which is the 27 to 42%. On top of that, do it in the realization way, meaning that you only pay this when you sell the stocks. You bought it, you sell, you don't need to pay in the meantime. But if you buy an index fund or if you buy an ETF and so on, it's more complicated. And it will depend on whether the fund pays dividends yearly or not, on whether the fund is or not in a special list of funds that's maintained by SCAT. And yes, this is not a joke. It is really this complicated. Just to follow up on this, so when it comes to index funds and ETFs, which are like, at the end of the day, bundles of stocks, but then sold and bought as bundles, as just one asset, there's two ways they're treated in SCAT, depending on if they pay dividends or they don't pay dividends. For taxation purposes, there are two types of funds. First, you have the utbytebetalende, which can be translated loosely as dividend-paying funds. These are funds that pay, as I said, a dividend every year. For example, the SPAR index funds that are very popular in Denmark and also on this channel, they pay a dividend based on the gains of the past year every February. These utbytebetalende funds will be taxed as stocks, so they will pay active incomes and with the realization principet. Second, you have the accumulerande funds, and these are translated as accumulating funds. So these are the funds that don't pay dividends every year, but reinvest the gains so they keep growing as time goes by, assuming the market is growing. These accumulated funds will be taxed in Denmark differently depending on whether they are or not on a SCAT list called a positive list. You will be able to find this positive list down in the video description, but what you need to know is that all accumulated funds will be taxed with this laggard principet, so you will always be taxed on unrealized gains, but only the ones in the positive list will be paying active incomes. Those not in the list will pay the higher capital incomes. Now, this is a lot more complicated if I would even add bonds and bond-based funds into the mix, so I have only been talking about stock-based ETFs and so on. If we add bonds into the picture, it's gonna add even more principles and more complications. So for now, let's not do that. Okay, just to put it together in a visual way, I have made a graph you can see here, and you can see that we have the two types of funds. So we have the ETFs and index funds and so on that pay dividends. They're called utbytebetellende. And why it says activa seret is because we have the bonds angle into it. I didn't want to include it in the graph, not to complicate you, but they are based on stocks. And these utbytebetellende funds, as we say, they pay the TA incomes, which goes from 27 to 42, will go up to 45 later this year, and they are taxed on the sale based with this realization principle. Now, if you get the other type of funds, which is accumulated funds, they also have to be based on stocks, and if they are on the positive list, then they will only be paying also 27 to 42 with the active incomes system. And if they're not in the positive list, they will pay the 37 to 42 plus share tax with the capital income setup. Now, both of these, regardless of whether they're in a positive list or not, will be taxed on unrealized gains every year. Now, how do you know if a fund is utbytebetellende or accumulated? So what you do is that you go to these websites, which I'm going to link down in the video description to give you a hand. And this is a website from a Danish guy, indexinvest.dk, very useful. And what they have here is a whole list of funds. And you can look, for example, just want to see accumulated funds, just want to see utbytebetellende funds. You want to check if it's in a positive list or not in a positive list. You want to check if it's in the mornings of sparring. It's just a great resource. You can then go and check the fund that you actually want to buy, and you can find all the information in here. If you also want to check this individually, what you do is that I'm gonna link down also to this website over here, where they have screenshots explaining you where you can then find this information. You can see, okay, it says accumulated. You can see the different things on the funds. What is the politics and so on. And again, with this, know whether you're getting into one type of taxation or the other, which is very important to know. So what is my recommendation? I strongly prefer to go for active income setup versus capital income setups, because active incomes at the end of the day, you'll be paying less in taxes. This means that you either go for dividend paying funds, so for example, a SPAR index, or you go for funds that are accumulated but are on the positive list. For example, the iShares type of funds. In normal countries, if we are honest, we would always prefer to go with accumulated type of funds instead of dividend paying, because each time you get a dividend, that's a taxable event. And when you just leave things accumulate, these kind of grow and grow without you having to pay any taxes in the meantime. But in Denmark, though, these accumulated funds are taxed on unrealized gains. We already know that unrealized gains is also not too sexy either. So the bottom line is that in the both cases, so if you go with the funds that pay dividends every year, or you go with accumulated funds that have to pay in the positive list the lower taxes, but they still have to pay unrealized gains every year, in both cases, you'll be paying a lot of money in taxes. And I researched a lot. I went through a lot of articles and Facebook posts and so on, and it turns out that there's no consensus among the Danish investors on what is better. What I have done myself is that up to late last year, I was investing almost exclusively on this utbyte paying funds, so the dividend paying funds. But now that there are more funds coming into a positive list, and the consensus is that, okay, it's not that bad either. So I'm also starting to buy more on the accumulated funds as well. One gives you pros, the other gives you cons. Overall, if you have both, it's also fine. So what I would say is up to you depending on what is your choice. For example, what we have seen so far is that the Danish-based funds have slightly higher fees, and yeah, okay, at least you don't need to take money out of your pocket to pay the taxes. But on the other hand, when you go with the accumulated funds, you just have a bigger choice with lower fees. But of course, you have to then pay these taxes every year. And that's all for today. If you want to hear more about investing in Denmark and my own setup, you should check this video over here where I go through it in depth. With that, thank you for watching and talk to you next week.